NIO stock analysis in a few minutes time. The last time I covered this stock was back in January. Overall, the video was negative on NIO stock, and we received comments like this asking me to apologize to my audience. At that time, the stock was trading at $35 a share. Now it's trading near $10 a share. It's safe to say that the stock has been destroyed. It's down near 75% for the year. So all in all, it seems like a good time to reanalyze the stock. Let's get into it. Part 1 are the technicals. Things are looking way more attractive for NIO stock at these prices. The stock recently filled a gap from July of 2020, which also corresponds to prior resistance when the stock was consolidating between 2018 and 2019. In addition, the stock is oversold on the 200-week RSI. However, momentum to the downside is very strong, and breaking below these support levels and oversold levels is a good possibility. The next support is just under $6, supported by levels seen before the breakout in 2020 and support from the consolidating trading range back in 2018 and 2019. Part 2, the setup. NIO is a Chinese stock, and China has huge economic uncertainties. From the Evergrande blowup to what seems like never-ending COVID lockdowns to delisting possibilities and to Xi Jinping's power grab on the country. The setup screams additional risk. And in this environment, a high-rate environment with huge uncertainties, investors are willing to take on less risk. Part 3, the valuation. NIO is worth roughly $16 billion in market cap. Revenue growth has been very strong, and in my opinion, will continue to grow at a good rate over the next couple of years. The company, however, is not profitable, and over the last couple of quarters, net income has been moving in the wrong direction. The balance sheet is solid, assets weigh more than liabilities. Since NIO is not profitable, the only multiple we can use is price to sales, which is currently around 3. The 5-year average is 11. However, we can't use those multiples because that's from a time that just didn't make sense. The price to sales multiple for NIO is comparable to other EV stocks. Part 4, the conclusion. For trading purposes, at these levels, the downside momentum is very strong. Buying today feels like trying to catch a falling knife. I would wait for the stock to settle down or buy it at around $6 a share at the next support level. At that price, jumping in before confirmation is worth the risk in my personal opinion. For investing purposes, you have to ask yourself if you're okay investing in VIE structured Chinese ADRs. Know that you do not actually own part of NIO when you buy NIO stock. This is a deal killer for me, and that's why I personally do not invest in Chinese stocks. If you're okay with the VIE structure, the valuation and long-term outlook look attractive, but it has to be for a long time horizon. It's going to be a while before non-profitable stocks actually start to rally. So it might be best just to dollar cost average over the next 3 to 5 years. Those are my personal opinions at least. If you're interested in live trade alerts, you can join the private Discord. A link is in the bio. Last week, we had more than 100% returns on NIO stock and missed a 10x on that stock by just one day. Over the last 2 months, we have had over 10 trades that have posted more than 200% returns. Here are a few examples. That's a wrap. Follow this channel for more, and I'll see you on the next video.